There once was a stock that put to sea. The name of the stock was GME. The price blew up and the shorts dipped down. Hold my bully boys, hold. Soon may the tendy man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. She had not been 2 weeks from shore when Ryan Cohen joined the board. The captain called all hands and swore he'll take his shares and hold. Soon may the tendy man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. Before the news had hit the market, Wall Street bets came up and bought it. With diamond hands, they knew they'd profit if they could only hold. Soon may the tendy man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. No deals were cut, no shorts were squeezed. The captain's mind was not on greed, but he belonged to the artist's creed. He took the risk to hold. Soon may the tendy man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. For 40 days or even more, the stock went up, then down once more. All gains were lost, it was looking poor, but still those traders did hold. Soon may the tendy man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. As far as I've heard, the fight's still on. The short's not squeezed and the game's not won. The tendy man makes his regular call to encourage the captain, crew, and all. Soon may the tendy man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. Soon may the tendy man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go.
Hello, everyone, to the W2 Report live on this fine 31st of January 2021. Hello, everybody, to the show. I am your host, Sanji Himura. Thank you for watching. And we are joined by a actual full panel today.
Hooray for full panels.
Yes. Let us do a let me do a thing first. There we one second. Little technical difficulties here, folks.
Just a couple. Nice disclaimer though. None of us are actual stockbrokers, so just be aware of that. We do, however, have an economist on hand. Say hello.
Hello.
And we have some puppy bloopers. Yay!
There we go.
Oh, we got it sorted out now?
Yes, we do.
Outstanding.
Welcome, everybody, to the show. You all know Lord Crocosquirrel from previous episodes of the W2 Report Live. Who do we have as our economics professor this week?
Our professor.
No PhDs over here. This is the nice lady over there is Mrs. Squirrel.
Okay.
Well, speak up. They can't hear you.
Hello.
Yeah, I'm sharing my office today. It's great. Try to change the pattern here. Let's go with.
Sorry, having a little bit of an issue. There we go. All right, there we go. So today we are talking GameStop and the great infinite squeeze of 2021. Now, to explain the backstory, we actually have to go back about 4 months when a user on Reddit posted the fact that we can actually use the hedge funds game against them. And they basically chose GameStop because of the fact that it is overshorted by get this, 140%. Now, to explain what a short is, I'm going to have to turn it over to somebody who knows more than I do. Mrs. Squirrel, you have the floor. All right. Apparently, I'm not hearing Mrs. Squirrel. So what a short is that let's say you are so basically what we have here is, I'm not entirely sure what's going on here, folks. Okay, everything's up in my end. Um Sorry, folks, technical difficulties. I mean, I should be playing Spanish Flea right about now, but I know I'm going to get copyright flagged for that.
Looks like the microphone may have gone tits up.
What?
Figure out where
I
it's
hear
at.
you.
You're hearing me now? Okay, good.
Yeah.
I disconnected and reconnected it. And apparently that fixed it. All right. So, say hello.
Hello.
Okay, that should prove to be a workable test. Did you hear her?
Yes, we did.
Okay, so since I'm supposed to have had the floor for that, let me go ahead and explain the process for you. What happens here is you get some individual that is willing to take a risk. Actually, you need two of them. You need one to lend a stock and another one to sell and buy back.
Mm-hmm.
The one that is actually going to do the selling sells the stock at the current price, waits for a few ticks for the stock price to go down, buys it back, to give it back to the person that lent it, and then pockets the difference. That's mildly oversimplified. It's mildly oversimplified, but it's probably about the most. It's probably going to be the best you're going to get for the time being. There's a whole flowchart that goes with that, and I will point you guys to the academic agent for that. He does. He goes considerably more in depth on the subject. He also tells you the stocks that they're trying to short like that. Yeah, they tend to get real toxic real fast. I put a link in there I put the Reddit link in there, and I still don't have a wrench on your channel, Sanji. Rude.
You're supposed to have a wrench on the channel.
I know that.
There we go. Now
That's better.
Now that's better.
All right, so there's that link, and I put a link here in the Discord, specific to GameStop. Click that here, and we'll enter that. No, that's not what I want. That's definitely not what I want. Let me just copy that here. Copy link. Maybe that works. Is that what I'm looking for? There it is. I still don't have that. That didn't come up. That didn't come up with. That didn't come up with a wrench now either. What the hell? Fucking weird. Okay, I'm just going to assume that YouTube is incompetent or hates me. Either one works.
Yeah,
the link
it's
is
showing
still
you're
there,
the
but-
video owner.
What?
It's showing you're the video owner.
What? I'm showing that I'm the video owner? How the hell does that work?
I have no idea. But
Oh well.
oh well. But the fact that yeah, play stupid games, win stupid prizes works very well in this situation. Basically
Well,
what happened. Yeah, go ahead.
A short sell is actually is a really risky sort of thing to do, as has been readily demonstrated by the weaponized autism of Reddit. Because Wall Street Bets managed to turn what was designed and intended to finish GameStop off has now got turned back on these people, and it turned into what's referred to as a short squeeze. You start shorting the stock in a large fashion, and then a bunch of people come in and start raising the price. And as the price goes up, you have to switch from tactics to try and see if you can get any money out of it at all. The problem, of course, is they only actually had 50,000 shares or so on the market, or 50,000 shares or so available, and that didn't end well for the hedge funds.
Yes, and looking over
the shares that were being lent were being purchased by folks that were actually paying attention to the Wall Street Bet subreddit and other such similar things, with some encouragement not only by the current CEO of GameStop, but also by Elon Musk
and Mark Cuban
and Dan Portnoy and a bunch of the other folks.
Now, the last short squeeze I remember seeing is the Volkswagen short squeeze of 2008.
Well, actually, believe it or not, you're thinking. I believe that that attempt was made in 2007. Don't quote me on that, but it didn't wind up being the. It didn't wind up being the sort of the anywhere near the kind of squeeze that we have this time. This particular short squeeze is absolutely unprecedented. They're in some really weird. They're currently in some really weird ass territory. Right. That nobody was actually expecting. Now there was a defense that's been running around on Twitter. This is people's retirement. This is money that they have that people will just not have later, especially when the market lost some $70 billion.
I was reading numbers anywhere from $60 billion to $70 billion.
I know the one hedge fund that decided to set this all off, they lost $40 billion on their own.
Right.
It just wiped it out, and GameStop's trading cap went from what was it, somewhere in the neighborhood of $50 million to 20-some billion, 22 billion.
Right. Which is a lot of money for GameStop. Now,
especially since GameStop got nailed to a wall last year.
Right.
Starting in March or April, when they were finally forced to shut down.
Right. Now, that being said, 3 events this Redditor pointed out triggered the short squeeze. Not just the Redditors themselves. First off, the CEO of Chewy, which is Ryan Cohen.
Well, he actually sold Chewy and bought into GameStop.
Yeah, he bought into GameStop and got 3 seats on the board of directors. The second event that triggered that was going to trigger the short squeeze was the launch of the PS5 and Xbox Series X.
That was expected to increase their sales in general. But the earnings call didn't actually wind up panning out in the sales call because they only had like a week to get that all sorted out. It just didn't do, and it didn't work quite as well as they might have liked initially. It still wound up, and just so we have this was 4 months ago. This was a prediction on the part of the critter in question.
Right. And then what was the third event? I probably forgot about it right now. So with that, the third event was the overshorting of the GameStop stock. Now, if we rewind at least a year ago, Tesla got short betted by a hedge fund, and then all of a sudden, production of the Tesla 3 kicked up a gear, and the hedge fund that shorted Tesla to begin with had to concede its position because of the fact that Tesla was making hand over fist. They had no choice but to.
Well, that's actually what happened here, only on a much larger scale.
Right.
But yeah, a short squeeze like this is effectively unprecedented. I mean, nobody saw this coming, and based on all the information I've gotten, I can't see why they didn't expect it. I would have.
Now, let's bring in our guest, Mr. Squirrel, here to debate this, to have a discussion on this. So we know that the discussion around the GameStop squeeze is unprecedented. And we also have a trigger. We also have a smaller short squeeze in AMC theaters, because everybody who missed the GameStop boat is trying to short squeeze AMC. Now,
the same is actually true of Nokia, Bed Bath and Beyond.
Yep.
How about you want to start with a description with an actual description of hedge funds, so they know why the hell a hedge is actually not associated with.
Sorry, folks, we're having some puppy bloopers.
Hey, you two, back up. You come here.
Okay.
That's what.
So hedge funds really are very risky. They're basically raise pools of money to purchase securities. And usually, most of them require clients to pay about contribute $1 million or more to really get the hedge fund be in the hedge fund. So these people to say, oh, that's their retirement. No, it's not. Because myself, I would never, ever put retirement in a hedge fund because of the risk of it. That's why even, the hedgies, they're going to go, oh, well, we can get this money, but then if something happens like this one, they're going to get it in the ass. Because there's,
Yeah,
Well,
Wesley Capital learned that to their detriment.
Mm-hmm.
And let's name the hedge fund in question on this short squeeze, and that is Melvin Capital.
Oh, it's Melvin Capital. I'm sorry. Where did I get Wesley from? Whatever.
I don't know.
Name and shame. Yes. In fact, they got a bailout from Citadel to try and shore up their position, followed immediately by all that money going poof. They also liquidated all of their shares in Alibaba to try and stay afloat
and more. Yeah.
Yeah, good. A large chunk of their portfolio went poof, completely into the ether
because they were trying to shore up their positions on GameStop.
Well,
didn't work.
when Robinhood stopped sales, stopped buy orders on their app, it gave the hedgies that 24 hours that they wanted to clear out to cancel their short orders.
Speaking of Robinhood, that is another facet of this story that we're going to cover tonight or today. Now, in particular, we know that there was a lot of PR BS that was fed to investors in GameStop on why they suspended sales. What really went on?
Well, first off, they got after the delisting, as I said a moment ago, all the short orders were canceled, so that they didn't lose any more. Right. All that really did was staunch the bleeding. On the other hand, Robinhood is getting shredded. Their app went from 4.5 or 4.8 stars, something like that. And it was and they wound up over the last about 2-3 days. They got a very, very quickly drafted class action lawsuit filed and 100,000 downvotes on the app stores.
And unfortunately, Google and Apple both wiped those out.
Well, that just means we have collusion from big tech as well.
Well, yeah. I mean, that's where the hedge funds mostly go, are the big ones, are the big companies.
Well, you see, here's the flip side of that. We got big tech censoring negative opinions, which is not a good thing in my book. That's actually rude, crude, and obnoxious. We also have folks in the know that are telling us that, yeah, the people doing the day trading on their app, yeah, those people, they're not the customers. The hedge funds are their customers.
Those people that are doing trading are doing it for the hedge fund.
Well, no, they're not doing it for the hedge funds. The hedge funds are buying the trade information, the information on the trades the day traders are making.
Yeah.
So they can
from Robinhood.
So they can get ahead of it, which is what Citadel Capital did.
But then Citadel Capital is, or at least has been, a major stakeholder in Robinhood.
Right.
And Citadel Capital doesn't like watching their money disappear into the ether. And
Now-
when you hand somebody, you know, $8.5 or almost $9 billion and watch it just and everybody watches it disappear in seconds, that's a problem.
Well, Citadel handed Melvin $2.75 billion.
I thought it was more than that.
Nope,
Well, it was a lot more
2.75.
than that. Because I know over the
unless there's information available that we didn't get.
well, I seem to recall a number bigger than that. But yeah, $2.75 billion even then disappeared in a matter of seconds.
Right.
And I think the rest of it might have actually come from the liquidation of Alibaba. But still, Robinhood couldn't, or not Robinhood, Melvin Capital couldn't keep up. There was no way to do that.
Right. Opal
And
has
they're
a very
still
excellent.
out $40 billion.
Yeah. Opal has a very excellent question. Isn't that like insider trading? I mean, not the same, but a mirror of it. If they are getting a heads up on the trading pattern.
Yes or no?
It could be. I think it just depends on what it is. And the thing is, though, is there's no real way of stopping it because there's no government regulation on hedge funds.
Right.
I mean, they just assume that the government assumes that the rich people can, regulate themselves.
Which obviously didn't work.
Yeah. Most of the time it does work.
I mean, what I mean is it did work, but then Reddit got involved basically and beat them at their own game.
Right.
I'm seeing numbers on the Reddit's position to be millions and millions of dollars, up to $40 million.
Right.
More than that, actually. Because for Melvin to lose $40 billion, you're looking at probably $1 billion plus in just folks buying. And we're not talking about a group. We're talking about individual investors that are going, hey, cool, I can do this and we can fuck the hedgies. And
Right.
who knows, maybe I'll make some money while I'm at it.
Well, that's the thing is if the stock is a low price, yeah, and anybody can buy that stock and pick it up and just hold on to it until the price goes back up. It's buy low, sell high.
Well, and on top of that, you're looking at what is it, $300 and some odd dollars at come 8 p.m. Eastern.
I think it was $325. Yeah, that's what the last number I saw.
Well, after hours trading got that back down around 315.
But even still, that's not that much of fluctuation. That keeps
Right.
us. It's more on a steady path right now.
But the 52-week low, which was actually just earlier this month, was $2.79. That's pennies.
Right, and somebody jumped on GameStop at that price and continue to hold their positions.
And we got a bunch of people. We have a bunch of people that had a bit of money to spend because the stock didn't make the super jump until it got to, what was it, just a little bit, right near $20,
Right.
$20 a share, which is about what it was, which historically is about where it was traded.
Right.
And then all you see is just this vertical line.
Yep. Up to $300. I think it was near $500 a share.
I think it was. You know what? Actually, I put a link in the Discord there. You can just go poke at it. But
Yeah,
let me just grab that here real quick.
347 was their
Well, that's just the recent. 347 there. It actually it was over $400 here not too long ago.
Right. Right. I see the high.
469.42 is the highest
On
it
the
went.
28th.
Is the highest it got, and that was just 3 days ago.
Mm-hmm.
It got to almost $500, and it dropped. It dropped down to what was it, $132, and over the next 24 hours, it picked up. It picked back up to almost 400 again. Right now, it's trading right now as of close of even after hours trading. It was trading at 312.
Right.
But the stock closed at, where was it? Actually closed at, official trading actually closed at 326.
Right.
So it took a bit of a dip in after hours trading, initially popped back up, and just kind of, and the waveform we're seeing here looks as much like a straight line as we're likely to get.
Right.
And that's just to read off the stock ticker. So what are you seeing in that 4 hours?
I'm seeing it. I'm seeing the stock level it out.
Yeah, that's what it did. It got up to a point, and then it leveled off.
Now,
But for a stock that was so low, and to come back up to that point, that's really not common, especially in that short amount of time. But it just, basically gave the hedge fund a smack in the face.
But yeah, now they're talking about regulating. Now they're actually talking about regulating the little guy.
But it's not the little guy that needs regulating. It's the big ones that need regulating.
Well, yeah, if you regulate the behavior of the hedge funds to not bet, so that they can't bet against the market, shit like 2008 and this can't happen, or it won't.
Well, and the thing is, that's right. 2008 is right. 2007, 2008 is right when we had that.
Yeah.
That.
The housing bubble.
Yeah.
That's when it broke, is because you were starting to see mortgage-backed securities, being defaulted on, and then the market itself shorted, and then the market went to short the securities out.
Yep.
They started short selling securities, and everybody knows what happened after that.
But
because that was a big thing.
Yeah, and even then, everybody's freaking out. Well, the economy's not coming back up. Well, yeah, it is. It's just coming back up slower than what you were expecting, which is really the way the economy should work. You can't go and have it just immediately pop back. And we're going to have a low right now because of the pandemic.
That and the new administration stabbing everyone in the back.
And it's going to take time for the businesses to get back in and start getting that to build back up to where they were. It's not going to be an immediate thing. It's going to take time. And that's what people need to understand. It takes time for this to work.
Okay. Let's do this. Opal's got another question for you. Yeah, that's all you.
Well, let's see.
The only thing I can tell you the stock price does is gives them more capital to work with.
Yeah.
X amount of money for a particular share.
Right. And
we'll give Belle a second to refresh her memory on that.
That one I really didn't look into.
Pointed questions from the Opal Dragon. What's new?
Well, we're working on that. More in if stock's value was pushed like it was in this event. Honestly, GameStop, I'm pretty sure the people that run GameStop freak the fuck out. Because they're going, we're generating a bubble here. We don't want to do that.
Yeah, we don't.
Right, especially what happens when the bubble goes pop.
If it goes pop, it looks if the stock maintains something close to its current price, then they won't go pop. It'll just level out, and that'll be the new trading floor. But what he wants to know is what the fallout's going to be.
Well, I could probably answer some of the question. I'm not going to be able to give a complete answer.
That's what we have. That's what we have her for.
Yeah.
Because she's brushing up on it just a hair. He wasn't actually expecting that.
No,
question.
I wasn't expecting anything else.
Well, to be completely honest with you, GameStop, if my memory served me correctly, had a debt of about $60 million.
They could more than pay that back now.
Right, exactly. And still be profitable.
Well, there's a difference between profitable and liquid. Got to be aware of that.
Right.
Because now at this point, that gives them a significant amount of liquidity, and that will help in terms of getting new fresh stock and other such similar things, paying the people.
Right.
Well,
Is it going to improve sales? Probably. It's not going to directly improve sales, but if it looks like the company's going to survive its current situation, then it's entirely possible that they'll be able to do. They'll be once they get. That's entirely possible, but they'll be able to weather the storm until the stores can be reopened.
well, with the stocks, though, the price of the stocks also allows to be able to pay the dividends to the stockholders.
Yes.
And that's you don't want to be in a position where you can't pay the dividends.
Right.
That's that's where you're going to. GameStop wants to be able to pay their dividends so that you don't lose stockholders.
Right. That being said, however, yeah, to answer Opal's follow-up, the online sales portion of the company increased by like 800% over year to date.
Right.
So it's just the box stores aren't generating as much profit as online sales because everybody wants that immediate gratification. Why would you want? It's another thing that we've got that's been making the rounds as well. People saying, "Well, everybody buys their shit virtual these days. So you're not actually buying it; you're renting it. You're renting it on an indefinite basis when you buy your games online,
right?
Because the license terms say you can't actually pass that down to anybody. In fact, there was a case. Apple had a case where somebody put their iTunes collection in their will for their kid, or their brother, some close relative, and Apple said, "Nope, not allowed," and Apple won.
Yeah, and speaking of that, let's turn our attention to Robinhood for a little bit. Robinhood,
that company that is getting flattened because they decided to be dickheads.
Exactly. Now, Louis Rossmann, he's known as an Apple repair guy, but he's recently started making videos on the GameStop situation. He made a very fantastic point on the PR backlash that Robinhood is getting compared to other brokerages like Webull and
But doesn't Webull actually charge per trade?
no, they don't.
No? In
No.
which case they're monetized in exactly the same way as Robinhood.
Exactly. But the difference between the reason why Webull as a matter of fact, I still have the video. I'll play a bit of the audio from the video.
As long as we can hear it, Mr. Sanjin.
Yeah. So let's pull that video up, explaining exactly why. Wrong thing. Explaining exactly why Webull is not getting sued, but Robinhood is.
Webull didn't delist GameStop when the DTC apparently increased its down payment size from 15% to 100.
Right.
At least that's what Robinhood tells us. Is that actually what happened? Don't know.
Nope.
Don't think so. Don't know. If they did do that, then that's the DTC working to shore up the hedgies as well.
Okay. Give me a second here.
Okay. Slink. Sorry, just kind of slinking out for a second. Be right back.
All right. I think I got it ready. Let me do a thing here and pipe the audio to my Discord. So, here is Anthony Dinner, CEO of Webull, explaining why what happened with their delisting of GameStop stock.
Let's peek behind the curtain
and maybe talk a little louder because I'm doing it through speakerphone, I guess, into my microphone. But
I'll try to speak up. Let me know if I'm drowning out a little bit. But so there's so much going back and forth without any real facts. I think what we're seeing happening in social media, most specifically Reddit, is an echo chamber of concerns people have that have nothing to do with the financial markets and the intentions that go behind stopping a specific stock or a group of stocks from trading. It's very easy. I mean, no politician will leave any crisis to go to waste, right? Famously. So they see something trending, and now everyone's putting their own agenda on it. What's happening, and I was very angry when I got a call at about 10:58 a.m. this morning Eastern Time from our clearing firm, and they informed me that they will not be able to support new opening positions in 3 stocks specifically: GameStop, AMC, and KOSS. Now, after yelling and screaming, this is insane, the reality is this: we need to settle those shares. If you sell a stock of GameStop, you expect to get paid for selling that share of GameStop. And when that action doesn't happen, when you sell your share of GameStop for $350 and you get zero back at settlement, that's a very big issue. Now multiply that by the billions of shares that are exchanging hands in a day for a stock like GameStop, and then you have a situation where you have complete market collapse, right? So to explain it simply, the reason why our clearing firm is not able to support clearance on those specific symbols is simple. We clear through a system called DTC. Back, 200 years ago, you would buy a stock and you would pay someone out, what do they get? Out in front on the Buttonwood tree out on Wall Street in front of where now the New York Stock Exchange sits. And you would hand that person cash and they would give you a stock certificate, a paper stock certificate. We don't deal in stock certificates anymore because it's inefficient. We trade so much volume now, having all that paper obviously does not work. So companies like DTC were started. DTC is the go-to company. They own this business, basically. They pretty much have a monopoly. There are alternative ways to settle trades, but DTC settles more than 95% of trades that happen on the street. Now, DTC needs to maintain an orderly marketplace, meaning if you sell a share, you are going to receive payment for those shares. That's what they guarantee. And in order to guarantee that, they set collateral rates for custodians, right, or clearing firms. So typically, on a typical day, there is 2 days till settlement. You trade today, you have tomorrow, Friday, and then you have Monday. So the stock will settle on Monday. Those 2 days, meaning Friday, and until the funds actually come and exchange hands, so to speak, someone has to fund that trade. And the clearing firm does that. That's one of their jobs. And typically, there's a collateral of about anywhere from 1% to 3%. So if you were selling a share of Apple, that clearing firm, until settlement date, would pay 2% of the notional value of that trade to DTC that DTC will hold as collateral until settlement happens. Now, because GameStop, AMC, and KOSS are so volatile, DTC has raised that requirement collateral rate to 100%, meaning that for every single dollar that exchanges hands in those stocks, the clearing firm has to send for deposit for 2 whole business days that exact same amount of the notional of the trade. Now, when we're talking about GameStop at $250, $350, billions of shares trading, we're talking about hundreds of billions of dollars that the clearing firm physically has to send in cash to DTCC to hold there for 2 whole business days. And to be frank, the clearing firms are not that well capitalized. They can't do that. So
that basically tells the story. Now,
But it sounds like we missed out the last bit. How about a link to that?
yeah, I'll drop a link in the chat. Copy. And a pasty. Now,
I'm trying to figure out
I'm
what it is.
looking out. Opal's comment.
Now, basically, to sum up the discussion, the DTC basically raised the collateral rate of GameStop, AMC, you name it, to 100% of the share price. And the hedge funds that fund Robinhood et al. Said, nope, we're not going to pay that. The responsibility will fall on the broker. And the broker said, nope, we're not going to pay that. And they put a freeze on that. Now, there was a tweet made by, there was a tweet by way of Andrew Cuomo that,
Cuomo?
yeah, I mean, Chris Cuomo, my mistake.
Oh, Fredo, you mean? Yeah, okay.
So, let me dig that up. Here it is. More audio. This time it's Robinhood CEO, Vlad something.
Vladimir, his name is?
Yeah, Vladimir is his name. So, let me pipe the audio for that into the discussion, so we can have a little chat on why Robinhood is getting sued, but not Weevil.
But that's the thing, is that the trust is in question, because it seems like the only people who are getting hurt were the big shots. And that if they were benefiting from this, your small investors now believe that you wouldn't have shut down the game. And just one thing without getting in the weeds here. You don't control the listing venue for GameStop. Now, I used to work in finance, so I know this stuff, but the audience doesn't need to. The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
Well, we have no choice. We have to comply with all financial requirements.
The SEC hasn't said you had to do this.
Well, lots of brokers.
That it for the audio?
That's it.
Huh. Something tells. Well, I don't know. I don't remember the last time I heard old Fredo actually say something halfway coherent. The audience does need to get into the weeds, and that's where I disagree with him. But I'm amazed that CNN had the balls to even try it.
Yeah. And compared to the CNBC interview that he did earlier that day, CNBC fed him softball questions.
Well, that's what CNBC is. That's what CNBC is for, to be completely frank.
And they believed Vladimir at face value. Chris Cuomo? Nope.
And here I was thinking, and here I've been thinking for the last couple of years that Chris Cuomo didn't actually have a spine. He just gets mad at random people and hopes like hell that his name recognition will be enough to save him. Now, if it had been Don Lemon, I wouldn't have believed it. I wouldn't have believed it. I wouldn't have believed any of that. Worst journalist of the year, Don Lemon. Worst journalist of the year. Yeah, Yale Journalism Review granted him that title in 2014.
Yeah.
He was the only winner, mind you. Absolute worst journalist of the year. Okay. So, we have any more commentary? Because I actually checked up costs. They make headphones, and they were trading in the about $3.50 range 5 days ago, and now they're trading at $60. So yeah, that's a substantial increase.
Yeah.
AMC theaters. I haven't checked AMC actually. I should do that.
Yeah.
AMC at last check was at $13.45. Don't quote me on the change part.
Huh?
Don't quote me on the change part. 13.26.
14. Actually, they've been within it. They've been mostly within a buck or so for a while now. Well, the last 24 hours. Check this out, though. They were trading at $4.72 when the market opened at 9:30 in the morning on the 25th, and that kept going until it actually hit $5 on the 26th, and then shot up over the course of looks like just a couple of hours.
Right.
It closed at $5 on the 26th, and first thing in the morning on the 27th, it was 20.
Yeah. Which basically means that they're beating their shorts. Which means more profit for the subredditors.
And when you beat your shorts, a mess tends to get made.
Yeah,
You should see. I wish you guys could see her face right now. Oh, the unbenefits of the unbenefits of having turned the camera over to the kid.
So, one last thing that we need to talk about is the lawsuits themselves. Now, I know you had a look at a couple of investor lawsuits against CD Projekt Red. What's the difference between those two lawsuits and the Robinhood lawsuit that was filed in the Southern District of New York?
Actually, all three are class actions. Although I think the investors in CD Projekt Red stand on a little bit firmer ground than the Robinhood folks. The Robinhood folks are actually working to demand reparations for the destruction of potential profits from the purchase and sale of GameStop and AMC. As far as the folks from CD Projekt Red, they can actually show a specific injury because Cyberpunk 2077 hit the streets in an absolutely horrid state on consoles. I had no problems with it on PC, none. And by the way, Opal, that's spanking the monkey, not beating it.
So,
although to be perfectly honest, both of those would generally result in a huge mess. Parking the porpoise is better, though. I promise you.
So to basically sum up the conversation,
see, it's actually kind of with okay. Let me get back. Let me get into the sort of semi-legal weeds. And no, I am not a lawyer, so don't take any of this as legal advice. It's just that I've been watching both sets of cases, so I have some idea of what's going on.
Okay.
They don't. The folks that are suing Robinhood, and yes, they put that shit together in a fucking hurry. Typos and all. So much so that the civil cover sheet was omitted, and somebody forgot to sign the damn thing. Right. Okay, they wanted that shit in now. They also seem to have used some sort of they appear to have used some sort of a form, because this lawsuit arrived almost instantaneously.
Right.
So there's that part to begin with. They did actually manage to define the class, though, so that was at least something. But it's going to be hard to know exactly what the damages are going to be, because they were allowed to sell the stocks but not buy them.
Speaking of that,
and that's as far as I know, that's damned irregular, isn't it? Usually, when they kill trades on a stock, when they kill trading on a stock, that works both ways. They make you hold stock for a day or two, at most, or actually even as little as an hour, to try and get shit sorted out.
Yeah.
By the time that's all said and done, trading shouldn't have stopped that long. It gave the people, or purchasing shouldn't have stopped that long regardless, because it would have given everybody the opportunity. Because what really happened here is the hedge funds got the opportunity to cancel their calls.
Right.
And if the only thing you could do is sell a stock, what's going to happen there is that it's going to the stock in question is going to crash, and you can see that in all of the waveforms.
Yep.
If you look at the stock tickers for AMC, COS, and GameStop, they went from a real nice high, and then they took a serious nosedive.
Right.
That day.
And then it stayed down.
And then it stayed down once buying was allowed again. Although most of them gained at least some of what they lost back.
Right.
Well, I mean, you can see it here on this one. It's all right about that lower level there. And then right about where it shoots up is probably where they were allowed to start buying again.
No, see, that was the original set of trades here on the 27th.
Mm-hmm.
Okay, you get to the end of the 27th, and this is about where everything got shut down. Actually, got shut down the following morning, and everything just freaking dropped out.
Yeah.
Yeah,
You can see the
yeah.
drop
The
there.
floor dropped. The floor dropped at 10 a.m. on the 28th.
Yeah, that would be right after trading opened. And then as you move along, let's see, on the 28th, that's 11:30 a.m. There's 10 a.m.
On the 28th.
on the 28th, and we already saw the initial drop right before that, and the overnights. It just started coming back up, and then it got killed, and the stock lost almost half of its value at that point.
Now,
Moving on, and then let's see where we go. Let's see, and yeah, the stock closed at about half of its about half the value it had when it opened again.
right.
And then about 9:30 in the morning on Friday, the stock picked back up. The stock gained another 50% on its initial value, or on the value on the previous open.
Right.
Or excuse me, previous close. And then it stayed kind of right in that mid range. It's been staying right in that mid range since. Which, yes, stabilizes the stock price, but it also means that the stock didn't come out being worth nearly as much as it could have been. This also results in significant losses for the people that had invested in it previously. And all three stocks in question have almost exactly the same waveform.
Now,
Well, not exactly. They're actually very similar waveforms. But you can see the way the trading was affected.
right.
Is that lawsuit, now that it's actually been refiled, going to succeed? Quite maybe. CD Projekt Red, the lawsuits against CD Projekt Red have a better chance of success, but this one's not completely gone sideways.
Now,
I think this might actually be. I think we might actually see some really fun tea going into the Robinhood lawsuit.
yeah. Especially since it was filed in a hurry, got rejected, and then filed again.
Because they forgot to include the civil cover letter and a signature on the freaking lawsuit. That's why it was rejected.
Mm-hmm.
There were a couple of other things that had to be corrected, and they were all and it was all done. Thereby the lawsuit actually works now. It's actually possible to prosecute it. Is it going to succeed? No idea.
We won't know until it happens.
Well, I'll actually be following the Robinhood lawsuit the same way I have been CDPR. But the two CDPR suits are probably going to be merged at some point, because they're more or less working off the same things.
Oh, sorry.
All the allegations are very similar in the two lawsuits. They'll probably be merged at some point, the two classes. Whether or not that's going to get anywhere, I don't know. CDPR's got the coverage as far as CDPR, the things that are happening for CDPR. That's gotten kind of boring over the last little while, because the class members, the lawyers in question, they all just shut the fuck up.
Mm-hmm.
Which, if we're being straight up, just to introduce another lawsuit, this defamation case that's currently being It's currently waiting for a decision on jurisdiction in Seattle. The lawyers in question, one Michael Brown and a Michael Saltz, have been playing tit for tat bullshit games, and they're doing it in public, which is never a good idea. Because if I was the judge in question, I'd say, get the fuck out of my courtroom. No, you don't get nobody gets jurisdiction here. Get the fuck out. That's what I'd do. And then they would have to refile in either Minnesota or California or something. I don't know. I don't remember. Minnesota, I think it is. But those two lawyers have been having a very public spat. We keep hearing a lot about one of the parties. The other party's just kind of hiding in a corner someplace. To the degree where the meme is, where is the other client? Yeah, that one turned into a dick waving contest, which makes it really entertaining to pay attention to.
Mm-hmm.
Scritch. Hello, puppy bloopers. But it's kind of one of them weird things.
Well, any thoughts on?
You have thoughts?
Any thoughts on the commentary so far, chat?
Oh, I think Opal is still losing his mind trying to die laughing. So I don't know if we're gonna get much out of chat. How about you? Any thoughts? Anything that you want to cover that you didn't get to already?
Just that, like with AMC's stock, they're gonna be lower because they're not being able to open up. And because they're not able to open up, that's going to keep their income down, and it's not going to help their stock at all. Once they open back up, you'll probably find that their stock will go back up.
Well, they've certainly been safe
if they don't go under first.
Well, it seems like for now they've been safe from complete bankruptcy.
Well, for now, but how many of them are they going to close because they can't afford to keep them open?
I don't know. Regal Cinemas has managed to shut down most of its shit.
Mm-hmm. Well, look at AMC down here in Auburn.
Actually, that's a Regal Cinema.
Is it?
The one Silver Mall, yeah.
I thought it was AMC.
Nope, it's Regal. If you want an AMC theater, we have to go to Tacoma or South Hill.
Okay.
I think we actually have to go to South Hill to find an AMC theater. And that's actually a small one. There's a bigger one in Tacoma I think it's over to Tacoma Mall. Don't quote me on that. And then there's a couple of them in Seattle, but most of this area is covered by Regal.
Mm.
But even their stock's not going to be super high because they're closed down right now.
Well, that's
right?
just the nature of the theater.
Well, but now that things are starting to open up a little bit, because we're in phase 2, we'll see what happens.
It was a way but listening. Opal's all good though.
He usually listens even if he's not at a computer.
But yeah, the big winner in this looks like it was GameStop. Despite the fact that it's a corporation, they're fucking evil.
Mm-hmm.
They make most of their money. They make the overwhelming majority of their money on used games. Because the actual margin on a new game is like $1.50, sometimes as much as $2.
Right.
On a console, you're talking maybe $20 on the high side. So unless if they're working in new games, if they work solely in new games, they have to have such a massive volume they wouldn't be able to keep up.
Right. No,
especially in the face of competitors like Walmart.
The thing is, though, is sometimes the used games are better than the new games.
Well, you get them you buy them used for a newer game. It's like $5 less than whatever the game cost in the first place, and then as they get older, the price goes down.
Right.
And you can buy a 2 or 3 year old game for whatever it is, for whatever console it is you're working from, and it works pretty well.
Yeah, I mean, it's like, oh, I really wanted that game, but it was too expensive at the time. And then when, it gets a little bit older, you go to the GameStop and you say, oh, that's the game I wanted. And it's, the price is significantly less. And that's what I did with a lot of my early games. So I'd just go to GameStop and get them. Because it was cheaper.
Mind you, the problem with buying those console games on the digital stores is that the prices don't go. Is the price is typically whatever it was originally.
Yeah.
So the prices actually remain artificially high for a lot longer because demand isn't an issue. You're not actually issuing a physical copy to cost you anything.
Well, yeah, because the demand is going to be unlimited on that. I mean, the
Supply.
supply is going to be unlimited because it's digital. But when you start getting them physical copies, supply and demand is a big thing.
Right. Let's see here. Any more comments before I wrap this up?
Not that I can think of.
No, I'm good.
Mrs. Squirrel, I'd like to thank you for joining us today. This has been Sanji Himura. I'd like to thank you for watching the W2 Report live. And remember, we're not here to give advice. We're just here to harp. See ya. All right, they can't hear us anymore.